Let's get the read from the Dow Jones Newswire's chief editor, Glenn Hall, and MaxFunds.com co-founder, Jonas Max Ferris. Gentlemen, welcome to both of you. Jonas, this expectation game we play sometimes unravels before our eyes. Yesterday was all about Caterpillar and fears that as China goes, so goes the rest of the Dow 30, I guess. Just the opposite today. What's the real story?
Boeing's is a very important stock right now. That's why these earnings were so good and are driving the market higher. It really is a measure of the global economy in some ways.
And huge, $100 billion
huge.
Revenue on an annual basis.
Everything was so great.
Incredible.
I mean, you could be picky about the cash flow, but this was a great number, no question about it. And we need these kind of earnings to drive the market back to highs because there is an underlying fear that there's a global slowdown. Also, this, from a trade war point of view, this is an important company because they basically have one competitor, Airbus, that's not in a trade war with China. So it's important for this company to continue to do well. It shows that the wheels aren't going to come off the train if we don't solve all our trade problems in a few days.
What do you think, Glenn?
Well, I think what's really fascinating about this earnings season is that we're seeing a much more forgiving market, right? We've seen them really erring on the side of rising, even if companies have missed a little on the numbers, which we haven't seen in many, many years. So there's a current bias, maybe because things were so oversold at the end of the last quarter that the market needs to sort of right itself a little bit. But there's definitely.
And what do you think of the Apple thing? Because if you really scrutinize the Apple report, it wasn't a great report.
No.
But I think one analyst said all the bad news is out now. Sort of the washing effect of that. Do you buy that?
Well, part of what we're hearing is, it wasn't as bad as it was feared it could be.
Right.
And then, and maybe some investors are buying into the theory that Apple is putting forward that, the services growth is going to be where the future is more than the product growth.
But there was little evidence of that in the latest quarter.
Just a little bit more growth in services, but they've made the point of putting out for the first time their profit margins in services, above 60%.
Right.
So they're trying to have that narrative.
What they get on hardware items.
Yes,
and maybe that's what they're preparing for, too. But, both are up today, and both are indicating right now that they see good times or better times ahead. We'll see when other numbers come out, like Microsoft's and all of that. How is this earnings season shaping up? Because I think that is what's saving the day here.
It's better than reduced expectations. To Apple, and that's the core thing. If Apple didn't prepare us for 6 months, essentially, for really bad numbers, and the whole $1,000 phone system business being questionable at this point, this would have been a huge crash for them. But this was expected. The stock was already down a lot late last year. This started when they said, we're not even going to tell you phone sales anymore.
And the warning earlier this month also set us up to have the expectations lowered.
We're going to go to someone who follows Apple very, very closely, but I'm wondering in the aggregate, the earnings we have thus far, we're a little more than a third the way through, I guess. And 7 out of 10 companies are reporting better than expected numbers. Now, albeit they ratcheted down those numbers, and to your point, Glenn, maybe that's the stunt I used to pull with my parents in school. I think I'm going to fail everything. And so if they saw like D's and C's, they thought I was a genius.
The Cavuto.
Exactly, the Cavuto effect. What do you think of that this is being strategized here?
Well, I think there's more of a market sentiment at the moment, as I mentioned before, that there was too much selling before, and they had to get back into some of these positions because now there's been this consistent upturn for a while, and the market is biased towards the upside. So I think people were afraid of missing some of that. And then, as we were just talking about, the earnings have been good. The only thing we're watching are those outlooks still.
Yeah, go ahead.
And rates are lower now. They're still lower than the adjusting for how low rates are. They're good enough. The earnings.
And by the way, we don't expect those rates to change, right?
No,
the
because
Reserve wraps up its meeting in a couple hours. We'll know where they stand. Not expecting any rate move, but maybe telegraphing their plans for the year.
It could derail things. They're off the raising rates train for a while, which they were probably riding too long, and the market doesn't want to see them back on it. So that could derail all this excitement with the pretty good earnings.
The market will be watching for more dovish talk. It's got to stay at that level.
It's got to be dovish, and just saying come June 1 we might change our mind isn't going to cut it, right?
You got to be talking about watching the data. That's what everybody wants to hear them say.
Right. All right, I do want to bring in, Eric Schiffer on this, a tech analyst who follows Apple and that whole side of the industry. And when we were talking, Eric, about the importance of Apple, not only because it's sort of like a proxy for technology, whether that's a fair, role to play or not, but it's a mutual fund as well for a lot of people who just like technology, like the idea of gadgets, and want to wrap it up into an all-service, one-purpose fund. The fact that it is up today and bouncing well off its lows, a long, long way from its highs, what is today telling you?
I think it's telling us a couple things. I think it's saying that the sentiment, Neil, was pretty negative, and that things were not as bad, certainly in the report. I think it's also saying that there are a lot of other engines that Apple can look to, certainly services. There are other things that are potentially on the horizon. And the other, I think, factor is I think the market is beginning to adjust to the fact that Apple is not going to be the same grower, but that it can still be a consistent earnings stream that has a tremendous loyalty factor to it with a majority of its users, perhaps not as much in China as we've seen because of how I think the pricing, at least from my sources, have affected sales there. But overall, there's a strong brand loyalty. And when you have that, you have the ability to incrementally raise prices. And so I think you're going to see this continue to be a strong company. It may not have the rocket growth that it used to, but they have a lot of cash to be able to buy innovation, maybe not always create it, but certainly purchase it and stack it on such that people will want to continue to maintain their emotional connection and relationship with the company.
You know, you mentioned China, Eric, and the fact of the matter is that business has been badly depleted and has been badly wound down, and there's nothing to indicate it's going to reverse itself. Yet even with that, the stock is being rewarded today. This could be one of those rare cases where a company is freely admitting its exposure to China is worsening and its business from China is deteriorating, and yet it's doing just fine.
Yeah, and it's interesting because I think the market is also betting on the fact that they're going to figure and get China right. And I think they were a little bit high on the pricing. At least the evidence that I have, certainly in China, and the people that I've spoken to suggest that they were high relative to what the value is against some of the other competitive products, largely the Chinese competitive products. But again, you know, I think the trade war ultimately is going to get resolved at some point. The sentiment with Apple because of that, I think, will change. I think you're also going to see ultimately a continued innovation from Apple, and therefore I don't think China is a lost cause. I think they're going to get it back. But overall, the market again had worse expectations for what this report was, and I think that's really what you're seeing.
No, I definitely think you're right. It's been built in the most miserable of all types of forecasts. But having said that, Glenn Hall, I'm wondering if we were showing where Apple has gone from its highs, even with its gains today. It's still off more than 30%, well into bear market territory. All the other tech stocks have gotten out of that bear market territory, the big names, still down from their highs. But Apple has been a laggard. If Apple can come back, get out of that bear market territory, would that be a significant development?
Well, you've seen what it's doing to the Dow today. You know, it's a significant component of the Dow, and it's also, I think, a harbinger of sentiment, broadly speaking, for the tech sector. So, yeah, Apple is a big influence on the market and our perceptions of where the market is going.